Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. So this is definitely a video that you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is currently testing a quite strong historical structure level for this market. In fact, this area was acting as previous resistance here, preceding all this rejection to the downside. Again here, it got tested and rejected to the downside. And we can see how, again, the market here tested and respected the area, again here, and then it broke above that zone. Now, what we know is that in the market, previous resistance, so a level like this, once it gets broken to the upside, becomes support. So at the moment, the market is retesting here this very strong level of previous monthly resistance turned support. And there is the possibility from here to see a rejection to the upside. So to see this market respect this area as support. Now, if we look a little bit at the most recent price action from a pattern standpoint, we can notice how we have a strong impulse to the upside followed by this correction. And in general, when you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly with this previous monthly resistance turn support, creating a confluence of support at this area that we could in fact expect this market to test and then to reject to the upside. So the monthly time frame as well seems quite bullish. And also remember that when you have a confluence of support area like this one here, there is good probability of seeing more institutional longing happening inside of a confluence of support area, which at that point would further increase the probabilities of a potential rejection to the upside. And we will be speaking about institutional longing later on during the analysis when we go and check what we have from a COT perspective. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can see how the market has been creating a series of higher lows from a weekly perspective. Starting from here, we had the previous low, then we had the higher low here, another one here. And at the moment, the market has the possibility of creating yet another higher low at this area. And at that point, potentially creating a new higher high. So essentially, the market has been in an uptrend so far from a weekly perspective. So everything seems quite bullish and there is a possibility for this market to find support at this area. However, also keep in mind that all this area here, so all this zone just below this low from a weekly perspective, is the confluence of support that we have identified from a monthly standpoint. Therefore, there is also the possibility to see a bit of a deeper move to the downside for the market to really go and test the liquidity that we have inside of that confluence of support. And at that point, to see a potential rejection to the upside away from this area. Now, if we drop down on the daily time frame, what do we see? Now, from a daily standpoint, this is where things get quite interesting. Now, at least at the moment, from a daily perspective, all the structure is currently bullish. We have a market, in fact, that is currently trading above previous daily resistance from which this move to the downside was created, which is now turned support here. And until the market will remain above this level, there is definitely the possibility to see a potential rejection to the upside away from this zone. The problem is that if we go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing, and we check the data here for gold, we can see how with the last reports, net positions lately have been decreased, not increased. In fact, we went from having 207.7k net positions all the way down to 147.7k net positions. Therefore, net positions have been decreased with the last reports, making gold weaker. In fact, we do not see any institutional longing of gold, at least for now. And we can see with the last reports actually that longs are getting closed from an institutional perspective, and that is obviously making gold weaker. And in fact, it has not been pushing higher lately with the last movements of this market. So the only way in which we could easily see a rejection to the upside is if we start to see once again net positions getting increased. So institutions starting again to add longs and then continuing to add longs, fueling at that point a potential push higher. That is why I said previously when we were on the weekly time frame that there is definitely a possibility to see a deeper test of the confluence of support that we have around this area before then getting a push higher. So to keep this thing simple, what I would expect in a situation like this? Well, first of all, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market inside of this area would shift from an intraday bearish market to an intraday bullish market, and we would start to see once again net positions getting increased, so institutions adding longs inside of this area, at that point I wouldn't be surprised if the market would create a rejection to the upside away from this level. And at the same time, I would not be surprised that if we do not see institutional longing and if this market remains bearish, we could go first for a deeper test of this area, and only at that point I would expect a potential rejection to the upside. Now, make sure to also go and check out my free Telegram channel. I forgot to mention it. You find it directly here on the screen and also linked below. I share there all my updates, so make sure to go and check that one out. And I will see you in my next video. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.